ChargePoint shares plunged 10% after the EV charging infrastructure company missed fiscal second quarter revenue estimates. ChargePoint posted $150 million in revenue, weaker than the $153 million forecasted by analysts. Separately, the company announced it would cut about 10% of its global workforce. So before we continue with the analysis, let's look at this article. It is coming from The Motley Fool. So heading into its fiscal Q2 2024, analysts were already pretty downbeat on the stock, forecasting 15% per share of losses on sales of $153 million. Yet ChargePoint still managed to disappoint. But not all the news was bad. ChargePoint may have missed sales estimates, but it still grew its quarterly revenue an impressive 39% year over year. The problem was that ChargePoint earned only a bare 1% gross profit margin on those sales, down from 17% a year ago because of the $28 million inventory impairment charge. And this tiny profit was then immediately turned into a loss by operating expenses. This implies that the company doesn't know how to manage the business, essentially. On the one hand, the company still seems to be growing its revenue base. Q3 revenues are projected to range from 150 to 165 million, so they will probably grow substantially. However, Tesla, that 800-pound gorilla, stole business from ChargePoint, as they are going to be the provider of charging stations for North America Hilton Hotel properties.
Tesla is announcing plans to bring 20,000 universal wall connectors to thousands of Hilton hotels across the United States, Canada, Mexico. Seema Modi has more. This is a kind of game changer, isn't it?
It is a game changer, Tyler, because for Hilton, they see it as imperative to driving bookings. Adding these electric charging stations to its properties, they say, will also come in the face of the hotel industry really facing growing customer frustration. In total, an additional 20,000 wall connectors will be installed across 2,000 hotels. These connectors can be used not only by Tesla cars, but any U.S.-made electric vehicle. And Hilton says these stations will drive or play a role in driving sales as electric car adoption is set to increase steadily over the coming year.
No doubt it was a limiting factor to not have charging capabilities. And so we think this will essentially surmount that limitation and allow any traveler, business or leisure, to take advantage of this charging capability now. The more ubiquitous we can have the charging capability, the more inclined travelers will be to stay with us.
EV charging is a top search inquiry on Hilton.com, often playing a role in converting search to stays. And the rollout comes as business travel season kicks off this month amid a flurry of conferences from the Apex Summit to Dreamforce. And it's worth noting that hotel occupancy and pricing have both weakened in recent months. We've been talking about how so many people were going to Europe. That really put a lot of pressure on the U.S. hotel market. So this next coming month is going to be huge for the industry.
Fascinating stuff. Fascinating. Really? Who's paying to the installation?
Tesla is, yeah.
Tesla's
so Hilton
paying.
will identify the properties where it makes most sense to install those charging stations. It's Tesla that sees this as an opportunity just to increase mass adoption. So they're fronting the bill.
Interesting.
Who's paying up now?
Who's paying
Tables
now?
turned.
All right, Seema, thanks.
All right, so we're going to go to the monthly chart, and we can see that we had this, I don't even want to call it a trend line, but I'll call it dynamic support. Right, held once, held against, held a third time, held a fourth time. But it's like a dam. Each time it put a crack in the dam until the dam broke. And that was your indication. Once the August candle closed on the monthly chart below this line, all bets were off. And trend lines are pretty cool. Typically when price breaks it to one side it's going to retest before continuing in that direction. And that's exactly what we got. Right, we had this false breakout to the downside, price found buyers, but again, overall trend still down. You can see it a little better on the daily chart. Breakdown, retest, collapse. Now, I had a conversation with my brother-in-law this past weekend, and he was saying how he bought ChargePoint back in, I think, May of 2021, August of 2021. I think it was late. It was late 2021. So let's just, he got in at the lows, right? Relatively speaking. Just throw in some more lines. One, two, three, four, five. Okay. So I told him when he made his entry, go back 52 weeks. And he got in at a decent level, right? Let's take this off. Move that down. All right, so if he got in at a decent level here, because this area is going to be very cheap. And I told him this is a gross way to assess valuation. Cheap. Fair value. Expensive. Very expensive. So we got in at a very cheap level relative to the last 52 weeks of price. Up here is wholesale prices, very expensive. You can call it a distribution phase. Down here, very cheap. Accumulation phase, discount. Oh, this is wholesale prices. This is retail prices, right? However, I told him if you wanted confirmation on his thesis, another way to assess that is just wait for the trend line break. So I was sad to see that he was still in the stock going into earnings, and now his unrealized losses is bigger. Now the reason why he got into it, because he said that he lives in the DC area, and he said the government was subsidizing some of ChargePoint's chargers. So, but again, it's best to align the fundamentals with the technicals, even if you don't know much. This is just a gross way to assess valuation, even if you don't follow charting or anything of that nature. Just look at current price, go back 52 weeks, break up that price range into fifths, and determine whether it's at fair value, cheap, or expensive, and then go from there. Thanks for watching. Subscribe. Please like the video.